Hi, good afternoon, everybody. This is Jeff here at AgAstra. Just Tim's out of the office here for a few days, so you might get me here Monday and Wednesday, and Tim will probably be back with you Friday. So if you have any questions, don't hesitate to reach out. And Tim's on the road a lot, so you're more than welcome to call him as well. But I want to start off with soybeans here today because they got our kind of our full and undivided attention a little bit here. So and the reason is, we've talked about maybe this is a bottom here in this wave two position, and the reason I want to show you this because one thing we look at is maybe as corrective action or if we started a new trend is trend channels, and so on the recent low here, and you gotta move up and then down in this trend channel. We broke out of that a little bit today. We started to test the top end of it after we broke out, and so that's really looking like we might have a breakout of this trend channel. So maybe start of a trend up, and I think we talked about this little plus sign on Friday that could be what they consider a wave three up. If that is true, then we could get significantly higher. Let's also walk through a couple other things here. So if this is the start of a wave three up, that means this wave one count is a 5 wave move. You got 1, 2, 3, 4, 5. And on this down move to this wave two, it stayed within parallel lines like we've talked about before, and it's equality. So you got the same move from 1440 down here to 1292, which is about $1.50, from 1420 to 1270. You're pretty much an equality move, 3 wave move. We got this up move going. We're breaking out of this channel, so it really looks good. We break this downtrend line that was, at the top end last July, as as we know that the beans topped out in. Uh, you know, we should come test this, and if we can break out of here and go, then we're looking at these highs. We break those, and beans look to be going significantly higher. So, not going to throw targets at it. They're pretty impressive, but we'll just move on from that. Now, there is one thing concerning that we'll talk about. That's actually on the November soybean 24 chart. Now, as we sent out an email last week about our improved delta hedge system, our relative farm delta, one of our indicators on that is these 13s, these 9s, and we do have a 13 on this November 24 chart. So when we see these in our improved system, we want to pay attention to these and maybe be taking some risk off the table in 24 soybeans. But that's in direct conflict with what our January contract is telling us. So what do you do with that? Well, we have ideas on that, and we're thinking through those. But our new system would be to make sure our relative farm delta, we try to explain that in the email, is that it would probably be at 50% in the November bean contract. So how would you do that, knowing what you do in the January contract? So if you're just going to, go buy puts out in the November, they're really expensive. You're paying for a lot of time decay on that, and we're not really interested in that scenario. So, honestly, the best way may be to sell futures, but you have to re-own calls in the front months in January or March. I like the March better. There's not a lot of time decay difference between those, and you get the extra 60 days of coverage. But they still aren't cheap. They still are expensive, and you have to re-own calls against that, and that would put you in a great bull spread against that November contract. If our front months are going to run and our November doesn't go anywhere, we're going to invert this bean market, and that's a great position to be in. Is long the front and short the back. So if you have any questions on how to do that for your farm, if you don't have the capital to do that, we have third parties willing to take that. It is against cash contract, but there are ways to do that. If you have a third party that's willing to do that, that's great. A lot of times, though, they only want to adjust that 1 or 2 times, and they will charge some fees against that, and that's pretty can get pretty expensive, and also kind of limits your ability to do some things that uh, some of our third parties are willing to let you adjust a little more. So we'd be happy to show you that. We put in our email that our new improved system of the back results, and we'd love to show those to you. We can't mass produce send those out because of compliance, and we're having but we back tested it. We'd love to show you those to you as well. But that's what I have on the soybeans. If you have any questions, don't hesitate to reach out. I would say if you're holding soybeans for this crop, keep holding them. Let's see how this whole situation plays out in the January and March contracts. As if we break these, it could get really interesting. Corn just didn't do a whole lot today. Kind of bouncing up against this cloud, like we've always talked about the cloud, holding the lows. Didn't hardly do much. It's, a little 4 cent range today. Just not a lot of action. What is kind of nice, you do have the crossover and stochastics. The MAC's not really doing a whole lot. We need force to really get positive here, to really get kind of moving. So not a lot to talk about in corn market. I just say keep watch. Make sure we're long above 470 for us is kind of the line in the sand. Kansas City wheat. Where is my Kansas City wheat? There it is. Kansas City wheat just keeps trying. It's slowly eking up. We like these indicators as we have for a long time. The MAC got positive today. Like the, you got the stochastic crossover. Some people like that situation. The wheat market is way oversold on the fund side. They're as short as they've ever been. It's a pretty interesting that they're as short as they are. And one reason I really kind of want to watch Kansas City wheat, and this could get pretty explosive, is if you actually pull up the Chicago chart, it really looks good. You've got these never remade new lows. Its lows stayed back here where Kansas City kept falling off. Chicago stayed up here. You got the 1-2 going on. You got this crossover. You got the MAC crossing over positive. You got the force crossing over positive. I mean, Chicago wheat looks about as good as any market right now as far as bottoming action going on there. So that's what I have to show you. Not else to show. If you do want us to show you those results on the back test of that relative delta farm hedge and explain that more to you in the concepts and how we're going to run that program moving forward, please reach out. We need to set up times because it will take a little bit of time on Zooms or however you want to do it to really explain that and make sure you understand it and see if that's a program that you want to look at to use. So if you have any questions, give us a call. As always, there's definitely risk in trading futures and options, and if you trade in light of your financial conditions, and always consult a trading professional as you need. So if you have any questions, give us a call. Have a great day.